Hey there, Mike Wise, CMG Home Loans with your weekly mortgage update. And today is October 3rd. Welcome to October. Boy, we've got 3 more months left in the year. And this week, we've got the government shutdown. We've got jobs numbers that we're going to talk about. And we've got pending home sales and rents, actually, that we're going to go through and talk about on this update this week. So let's take a look and see what we've got over here as far as some of the talking points. So this is the pending home sales. Pending home sales, they finally go positive. So in August, National Association of Realtors, the pending home sales, that tracks the number of houses that actually went under contract. It rose 4% month over month to 74.7%. What does that mean? Well, that means that people are getting off the fence. So the interest rates, they dropped by about 30 to 40 basis points over the last 30 days. And we've got some people that got off the couch and actually moved on buying some houses, put them in contract. So having said that, the pending home sales, they are going up. Mortgage rates are going down, so this is good news. It's starting to kind of get that in. But we still have the lock-in effect. What is the lock-in effect? The lock-in effect is basically people with less than 6% interest rates. They are not moving. They like their mortgage rate under 6%. It's a good rate right now, and they are staying put. Now, having said that, I was at an event this week with 2 real estate agents, and they're talking about their clientele, and they said they have a lot of pending people that are wanting to buy houses but just waiting for interest rates to go down. We have some ways to help you get those interest rates down. So if you want to try and do that, I can work with you and get those rates down. But there's a lot of people that are still kind of waiting. If we flip the script, though, there's about 20% of homeowners right now that have interest rates above 6%. So there is some opportunity, 1, for refinancing, and 2, to move to another house and basically get the same interest rate. So that's good. Rental vacancies, they hit a new record. Rental vacancies hit a new record. That means that there are more houses, more house units for rent than there are people looking. So that's not a great sign. That means that if you're trying to rent your place out, it's gonna, the price is gonna be an issue, and it may take a little bit longer to rent out your place. So that is interesting, right? Case-Shiller comes out. Basically, National Home Price Index grew just 1.7% year over year. And that was down from 1.9% in June. Most of those gains, they started in the first half of the year, and then the last 5 months, we've seen price decline. So price is coming down, inventory is going up, interest rates going down. This is a good sign. This is healthy. This is a correction that we need to have here. So FHFA is reporting some of the same numbers there. ADP came out. So the only jobs report we got this week was the ADP jobs report. In fact, let's take a look at what that says here. So this is from ADP. Despite the strong economic growth we saw in the second quarter, this month's release further validates what we've been seeing in the labor market, that the U.S. employers have been cautious with hiring. So this is a serious sign here. This is what the Fed is looking at. And you can look at, this is a chart that I want you to kind of understand here, is that this is small, mid-sized companies, down 19,000, down 11,000, down 9,000, down 21,000. The small and mid-sized companies really took a hit in the job market right now. And so the number of employees are going down. The only people that are hiring are are the large companies, 500 plus employees. That's where most of the jobs came from. So this small market size, this is what drives our economy, are these small and medium-sized companies. That took a big hit here as far as the jobs numbers is concerned. Now, when you take a look at that, this is the Fed watch. This is the probability that the Fed, so here's the meeting dates over here on this side. So our next meeting date is October. The chances of it going down to 375 from 4%, the Fed funds rate, is 96. So it's almost a shoo-in at this point in time that at the end of the month, we're going to see the Fed funds rate go down another 0.25%. And then in December, there's a really good chance that we're going to see it go down another 0.25%. So those numbers, even though the Fed funds rate does not determine the actual mortgage rates, the yield does, which is what we're looking at right here. That's what drives these numbers. The yield drives the mortgage rates down. And so when you take a look at this, oops, let's see here, we can get logged back in real quick here. But basically, when you take a look at this, the yield already is taking into consideration the numbers that are down here. And so when you take a look at this, let's actually go back. I'm going to go back 1 year on this so that we can take a look at this. The yield, we hit just 4% a couple of weeks ago when the rates were low, and then we've jumped back up since then. But you can see this is kind of like the line right here. This 4% is kind of where you've hit the low. This is from a year ago. This is 6 months ago. And then this is, you know, just the last couple of weeks we've seen it hit the 4%. So it was just before 1 year ago that we saw the yield go down below 4%. So in order for mortgage rates, all of this is saying here, what this is telling us is that this is taking into consideration these probabilities that the Fed is going to lower the Fed funds rate. So the market, what I'm trying to tell you is the market is already taking into consideration those numbers, and that's where the interest rates are for the yield. So we're hitting 4.410 right now. We need to get it down to like the 380 number in order for mortgage rates really to get below 5%. And that's where we'll start to see some more movement in the market. So we're trying to get those numbers down under this number under 4%. The 380 is kind of be the number that we need to see. So at the end of the day, ADP jobs report, that was super important. It came out really not well, and it was down 32,000 jobs were lost. And so that was a big number. We did not get the BLS report on Thursday and Friday of this week. And so those numbers, they will have a big impact. Once the government gets back rolling again, we'll start to see those again. So I wanted to show you some of these things. This is some interesting information here. This is kind of like the market, the real estate market, right? And it goes by city here, and it has the peak date. And from the peak, it has what it's done since the peak. So in Phoenix, we went in June of 22 was the peak. It's been down 5.2% from the peak, but it's rose 60% since 2019. So there's huge increases. You can see these over here. You can go city by city and see where we've been. And there's a couple of things that Chicago, New York, Minneapolis, Cleveland, Detroit, those are all at record highs right now. And so those guys are screaming right now. But the rest of the market, we've seen some downtrend, and it's not a crash at all. When mortgage rates go down, you're going to start to see those. You're going to start to see those numbers or the values start to go up again. Interest rates in the low sixes. They're just hanging out there. A year ago, see, we were at the 6.12%. So that was October 2nd of last year. You can go by the bond market here and the yield, which I showed you from a year ago. You can see right here, we hit down. That was not quite 380. So you can see if we hit that 380 number, we are going to get below that 6 handle and go into the 5 handle. So at the end of the day, this week was jam-packed with stuff. Mortgage rates have jumped up just a little bit, and that's it. That's all I have for this week. If you have any questions, please feel free to reach out to me. I will be available this weekend via phone, text, whatever you want to do, give me a call and I can update. Otherwise, I will see you next week. Have a great weekend.